Jamil, good morning. So let's start with the ringgit. The ringgit has rallied since the last low point that we last talked, from the low 4.4, 4.5 against the US dollar. It's now at about 3.8, 3.9 to the US dollar. What's driving the rally?
Well, look, I think there's a lot more optimism around the Malaysian currency right now because this is a currency that was aggressively sold last year. It has bounced back from its lows from 450, which it hit around September, October time. And we basically believe that due to the emerging market sentiment becoming a little bit higher, pushed back US interest rate expectations, there's been an improvement in commodity prices. Although they are still weak, we have seen a rebound in the price of oil. This has helped the emerging market sentiment as well. And what we basically believe is that slowly, the Malaysian currency has regained some momentum and psychologically passed through to the next stages of its psychological recovery of what have been heavy losses. Now, I'll give you an example of this. Once the price of oil closed above $35 in the final week of February, we sent out briefings to the media and said, look, guys, this means the Malaysian currency is going to pass on to the next stage. And we saw it pass 420. Slowly, it became 415 as resistance. Then it became 410. All of a sudden, 4 was the resistance. And now we've passed through that. We're ranging between 380 and 4 for Q2. For the currency to extend its gains even further and its recovery, what we need is exactly this. WTI oil, it needs to close above $42 and sustain a rebound above this level. This would provide momentum. And US interest rate expectations need to continue to be pushed back. Now, if I'm honest with you, pushback interest rate expectations, we can expect this. But WTI oil is unlikely to close above $42 for now. And this is why we're personally saying that we think there's far more potential for the currency to continue ranging between this 3.8, 4 level over the next coming weeks and maybe months.
Well, we saw that the WTI as well as Brent crude oil took a slump yesterday at 7% slump on a single day loss. Does this spell bad news for the Malaysian ringgit?
Anybody who was expecting an OPEC agreement to come across this Doha meeting to be the outcome was being a little bit ambitious. What we keep saying and continue to say is, look, you've got so many different OPEC producers. They have to sit around the table and come to a mutual conclusion. Do they want oil prices to rebound? Of course. But who's going to be willing to sacrifice the cut in production? And then these committee members have to agree to take the same steps. So you need to combine and collaborate your ideas. And then following this, you need for worldwide oil producers to say, yes, we're also willing to sacrifice this. This will lead to a longer rebound in the oil prices, which would drive the emerging market sentiment even higher. Unfortunately, it's a lot more easy to say that this could happen hypothetically than it's going to be the case. And this was the outcome of Sunday evening. In regards to your question on whether this spells bad news for the Malaysian currency, I would say more positive. I think that oil prices naturally did decline on the news, expected. They still haven't dropped below $35. That's the critical level. And we think that this means that the oil prices can rebound a little bit more at some point. It means the Malaysian currencies come under a little bit more pressure. We've seen some profit taken from the highs, but we're still ranging between these levels. If oil then closes and slips below $35, critical psychological resistance, which is now support, this is when the pressure and maybe the more negative times would come back to haunt the currency. But for now, we don't see this happening.
On other currencies within the region, including Rupiah and the Singapore dollar, they've also strengthened a bit in recent weeks. Do you think this trend will continue on?
Well, look, Singapore dollar, basically, it's got very consistent central bank policy. The currency is basically ranging right now. So if the Malaysian ringgit strengthens, it's likely to strengthen against the Singapore dollar. As such, if there's profit taken in the Malaysian ringgit, we're going to see the Singapore dollar then re-strengthen against the Malaysian currency. Indonesian rupiah, very interesting story right now because the currency is strengthening, like the ringgit, was heavily oversold last year. But central bank policies actually supported the Indonesian currency this year. And that's because the Bank of Indonesia, they've cut interest rates multiple times already in 2016. We personally expected this as well. And investors have looked at this news quite positively. Okay, the Indonesian central bank are doing something to support growth, positive stimulus measures. And Indonesian economy still has a lot of potential.
We saw the Indonesian tax regime being viewed right now, where the leadership wants to reduce corporate tax to now to 20%, even 17%. What benefits do you think will hit Indonesia going forward?
Well, look, from an international standpoint, one of the constructive areas of feedback we regularly receive about Indonesia is that there's a lot of bureaucracy. There's a lot of rules, there's a lot of legislation, and this can always, in some way, weigh on an international investor's mind when they're thinking about which emerging market could be attractive to import your capital. So any relaxing of regulations, whether this is maybe labor laws, improving infrastructure, relaxing taxation, this can then become more attractive to international investors.
We saw the pricing of emerging markets declining in recent weeks. The question is, why are the pricing of the emerging markets reducing? Is it because of the perceived increase in terms of risk premium? Will emerging markets continue to be attractive for investors?
Very interesting question. What we're seeing from investors in 2016 is a lot of risk aversion in the currency markets and financial markets. Investors are not so forthcoming towards taking on risk as they used to be. Having said that, we do think the emerging markets have rebounded a great deal over the past couple of months. Pushed back US interest rate expectations and also rebound in the commodity markets has supported this. If we see stability over the Chinese RMB over the next couple of months, this can help the emerging markets as well. There are reasons to still be optimistic. Regional growth is still high, but what it is that these markets are coming under some pressure, like commodity prices are still depressed. There's still prolonged weakness. Central banks are still easing monetary policy, like India cutting interest rates, Indonesia cutting interest rates. There is a lot of risk in the markets right now. Like you rightly said, the story in Brazil, it's fascinating actually, because when you're talking about a currency and an economy that could literally have everything go against its way, this has happened to Brazil over the past year. I mean, you've got weak economic growth, economic contractions, you've got depressed commodity prices, you've got slowing demand from China. On top of this, you've got government protest. Literally anything that could go wrong for your currency has happened to Brazil over the past year.
But in South Africa, there's a clear move from the ANC to remove the president of ANC, Jacob Zuma. Do you think this will allay some fears there?
Look, political instability and the potential for such could always have a weight on investor sentiment, both domestically and internationally. But what we would say right now, if you're looking at the South African currency, is that the central bank are really trying to strengthen it right now. They don't want a weaker currency. You know, it can be negative in terms towards that growth. And you can see that the South African central bank are being very active when it comes to hiking interest rates higher to make international investors a bit more attracted towards these markets. This is something that towards the end of last year, I was saying, guys, you know what? Do not rule out the potential that this circumstance, this situation, could replicate itself in Malaysia. In terms of, okay, the currency keeps weakening, we need to strengthen it. What could we potentially do as an option? This is why I was saying, look, one option that's out there, I'm not saying it's going to happen, and we haven't seen it happen, is that maybe the Bank Negara could look towards raising interest rates. They haven't, and now they don't need to because the currency strengthened naturally. But these options are always there.
China Q1 GDP figures registered at 6.7%. It leaves the market a bit mixed in terms of reaction.
Definitely. Look, China's economic growth is still phenomenal. And one thing that we've been saying repeatedly and globally, no matter where I've been for the past year, is look, a slowing economic growth in China is no problem for China itself. Hey, guys, I travel to China regularly. Trust me, on the streets in China, there's no problem when it comes to spending. What the issue at hand here is that China's the world's second largest economy. The potential is still phenomenal. But all those economies, and trust me, this stretches globally, that were reliant on demand for trade from China, are going to notice a decline in export demand. This is where there's weight to the emerging markets. And you can see that the IMF are regularly saying, or financial institutions, very respected institutions like the IMF are saying, look, weaker China means there could be concerns for global growth. It does weigh on the emerging market sentiment. But this isn't just in Malaysia, it's not just in Indonesia. You're looking at what's happening in South Africa. When we talk about the problems that happens in Brazil, China demand for mining slowing has an impact. That's why we're saying that China's slowdown, it has a global impact. It's a global phenomenon.
Is there any political risk associated with the 1MDB scandal?
Well, look, when it comes to any kind of potential political instability or questions over investor confidence, they can always have a weight on both domestic sentiment and the international sentiment as such, so you could see risks to the currency. I do think that the 1MDB situation that unfolded over the past 9 months or so, specifically when the news was released, it did contribute towards pressure on the currency. It's not the only reason why the Malaysian ringgit declined. And if somebody's saying that, I question that judgment, because look, that was the exact same time the US were going to move interest rates. Commodity prices were getting absolutely pounded into the floor. But yes, it can contribute. And I would say it was perhaps a risk to domestic and international investor sentiment. But having said that, the Malaysian currency is looking a lot more positive recently.
While it's also unfair to attribute the fall of the ringgit because of the 1MDB, is it also unfair to attribute the resolution of 1MDB scandal and the rise of the ringgit?
No, look, these are a combination of different timely events that have just happened at the same time. Look, at the same time as this situation somewhat unfolding and the pressure easing, commodity markets have bounced back. There's questions over US interest rates. That's why we always say at FXTM that we need educated investors. We like educated clients that understand that there's a different matter of events that at any point in time can impact the sentiment to a currency. I would say that the pressure on the 1MDB situation easing somewhat at the same time that oil markets did rebound a little and Federal Reserve interest rate expectations have come under huge scrutiny. This has helped the Malaysian currency as well.
Speaking about falling back to your earlier statement saying that the Bank Negara could explore raising interest rates, do you think that Bank Negara would actually look at this even as a possibility because of the non-interest rate that we saw, hike that we saw in the Fed?
What I would say is that now the currency has rebounded, the potential for this are now even slimmer than what they perhaps were before. They've always been pretty front forward with statements that stable central bank policy is the way for Bank Negara. I think that the potential for this is very limited now compared to what it could have been. But what I would say is, look, if the currency is coming under huge pressure, if inflation continues to peak higher, and it shouldn't now because the currency is strengthening, which means that these inflation readings should be shorter term. If, on the other hand, it did continue, it would put a little bit more pressure on the central bank to move the other direction. But right now, stability is probably the key.
I've been speaking to Jameel Ahmad, the Chief Market Analyst at FXTM.
Thank you for listening.